Hello and welcome. This is Rupert Pontin, Head of Insight and Communications here at Brego. I'm back with the Brego Leisure Intel broadcast for June 2026, in which we're going to have a look at what happened in the UK leisure sectors during the course of the month, as well as a short summary of the current UK political position and, of course, the UK economy to see what drove retail consumer activity during the month. So let's get on with it and start with the economic update. So, without wishing to dwell on activities in the Middle East, it's fair to say that after a largely successful period of ceasefire, the war has intensified. And as I record this, the Strait of Hormuz is now closed again. And of course, bombing has recommenced, and it looks really quite ugly out there again. Moving on, the UK economy found itself in a bit of a quandary after the resignation of Keir Starmer on June the 22nd. Now, this came after a period of heavy speculation and ultimately Andy Burnham's victory at the Makerfield by-election held on June the 18th. Moving to the KPIs, and June looks to have been very steady on the face of it. Firstly, the inflation rate remained at 2.8%, which came as a welcome surprise. However, it's unlikely to remain at this level for July due to, in part, the 13% lift in the energy price cap, and that will have its effect at some point. In addition, the Bank of England Monetary Policy Committee left the base rate unchanged at 3.75%, and that's also great news. Now, those two things really help keep consumer confidence where it was at minus 23, which was against expectations and very welcome, to be fair. So despite the continued stagnation of the property market, the mortgage rate edged down by 0.2 of a percentage point. Now that has fallen to 4.9%, but this is still unlikely to give house sales the boost they really, really need. Now, the opening of the Strait of Hormuz saw the price of a barrel of oil fall to $73 at the end of the month, and that resulted in a drop in the price of a litre of fuel, as you would imagine, and that dropped to £1.51. So overall, we've therefore had a better month on the face of it, but there may well be clouds ahead. So looking at the UK used leisure market, we are as ever going to be using Brego Insight. Now, Brego looks at whole market data and views thousands of retail adverts on a daily basis. These, combined with our rich historical database and the unique market-leading neural network-based valuation methodology, enable us to give our leisure customers world-class data and insight and accurate pricing. So what did we see in June? Well, for touring homes, total adverts decreased by 0.1%, so a very small amount after increasing by 7.7% last year. And this would imply there was a fair balance of stock to sales, which shows a great market position. So two-berth adverts increased by 6.3%, and that's exactly the same as it was in May, actually. And that's higher than the whole market figure, and often is the case at this time of year when there's perhaps less demand for two-berth models. Now, four-berth adverts grew by a little bit more, and they increased by 8.4%, and that is a reflection of the activity in the new market in the last 8 weeks or so as family part exchanges have hit the dealer pitches. Now, in total, that represents 56.8% of all adverts, and that is slightly less than it was in May, where it was 57.2%. Looking at sales volumes, they increased by a significant 15.5%, so after a 2.8% increase the previous month. And that really does show that the summer season is well underway. If you look at that split, two berths went up by 4.8%, four berths went up by 14.4%, and five and six berths increased by 18.2%, although that is a small proportion of the market. Now, that really does show that the family buyer is out in force, or was out in force during June. Looking at days to sale, however, these increased by 11.7 days to 55.8 for the overall market, and that was a disappointment. The average used touring home sale price increased by 12.9%, and that rose to $18,150. For a little bit of further context, the average two-berth price increased by 12.6%, four-berth increased, as I said, by 15.4%, and five and six-berth increased by 5.8%. The remaining tours in the marketplace, different berths and layouts, they help reach that whole market total of 12.9% as an uplift for the month. Holiday homes. So total adverts increased by a healthy 12%. Now that's interesting, bearing in mind the other verticals didn't increase by that amount. And that's really a reflection of the increase in part exchange homes following the increase in activity in the last 4 to 6 weeks. Sales, and that's indicated by the number of adverts that we see removed in June, showed a strong boost of 16.3%, so slightly more than the touring homes, which is again what would be expected for this time of year and is probably a reflection of the better weather and an ongoing consumer fear of holidaying abroad during a period of geopolitical instability. Two-bed sales volumes improved by an astonishing 86.5% month on month, although that was at the expense of the three beds, because three-bed holiday homes dropped by 30.8%, having been level the previous month. That may be a little surprising, but it could just be a reflection of the used stock profile that's matching to retail demand at the moment. Overall, days to sale increased by 19.6, and that took them up to 70.4. And that really is a result of the sales slowdown that we saw in April and the early part of May. And that has kept some of the stock sitting at the parks a little bit longer than they really should have been. The average used holiday home sale price decreased by 2.7% to £23,194. From a motorhome and camper perspective, total adverts increased by a nominal 0.7% during the month, and that suggests that the market is pretty well balanced in supply and demand terms, although sales during the month increased by a significant 14.6%. Now, that shows that despite an obvious increase in stock levels, demand was exceeding supply, and the split on this was an increase of 10% when looking at just motorhomes and 14.9% increase for campers. Trade adverts increased by 0.4% for the month, and private adverts increased by 4.1% compared to May. This is still slightly above normal levels, and perhaps that reflects the desire for home converted camper owners to move to more modern factory conversions because they've enjoyed working with their own product and they actually want something that's been properly built for them. Days to sale, they were exactly the same as May. It's 76.4, which remains high for the time of year, to be honest with you. But given the sales volumes and retail demand, we may well see that change as we go forward. The average sale price for used motorhome and camper decreased again in June, and that decreased by 1.6% after 1.7% the previous month. So almost exactly the same. And this seems to be becoming a bit of a trend. So we'll have to see how that works out in the coming weeks. So to summarise the Brego Leisure Intel for June 2026, sales levels across all verticals have increased by between 14.6 and 16.3%, which is really positive news, and it highlights the fact that the market really is approaching its peak. There are some interesting nuances in this data, though, and they're absolutely worth exploring. So a call to the Brego team would be worthwhile for you and your business. Stock levels were fairly static for tourists and motorhomes and campers, although there was this 12% increase for holiday homes. And as I said, this is largely due to the slower pickup in sales that was experienced in April and May. However, from a days to sale perspective, the news here is not so good. There's been an increase for both touring homes and holiday homes, with motorhomes and campers remaining broadly even. Now, these are likely to drop in the coming weeks as demand is exceeding supply in most verticals at the moment, and we are approaching the peak selling point of the year. Average sale prices increased significantly by 12.9% for the touring home vertical, although they slipped back for holiday homes and motorhomes and campers. The latter two really reflect the market sentiment of retail consumers looking to cut costs and buy something newer but slightly cheaper than maybe they would have done before. And it will be interesting, really interesting to monitor this over the coming weeks. So on the face of it, June was economically sound, although we know that there are some underlying factors at play in the background. Last month, I said inflation would probably rise in June, but it remained static, and there are now reports and forecasts for it to continue to drop, although this is somewhat hard for me to understand, really given everything that's happening globally and the impending arrival of a new Prime Minister in the form of Andy Burnham. What we do know is that the leisure sector is performing well at the moment, and let's hope it stays that way. Now, I know you will have found this a valuable review of the UK leisure markets in June, and if you want or need more detail, be sure to read the Brego Monthly Leisure Insight Report, and that can be found on our LinkedIn page and also on our website. Alternatively, please reach out to me by phone, email, or LinkedIn, and I can forward it to you. In addition, for those that may be interested in a wider view of Brego data, we now also sponsor the Dealerway DealerPod weekly car podcast, and we have also teamed up with Motor Trade Radio as their trade values partner, giving a monthly summary of used car activity in the UK market. Finally, I just want to reiterate that if you want to improve your market insight and understanding of the shift in today's UK leisure sector, then you need to speak to the Brego team. Andy, Safi and Nick would be delighted to show you how the Brego pricing and market data will help you and your business to improve understanding of the market as a whole, and also to set better, more relevant trading and pricing strategies and ultimately increase profitability for your business, because that's what we're here to do. Remember, they don't bite, they're here to help and empower you. Thank you for watching, and I'll see you soon.